Hey, what's up, everybody? It is Friday, December 11th. So, we had a kind of a mixed activity in the market today. We were down, then we recovered. Senate passed a stopgap, a 1-week stopgap continuing resolution, so there will not be a government shutdown. I mean, Trump has to sign that tonight. They also passed the NDAA, that's the defense bill, $740 billion. But they still need to put together a government funding package through the remainder of fiscal year 2021. They're going to be working on that. It's interesting, though, the $740 billion defense NDAA authorization. You never hear them say, how are we going to pay for it? How are we going to pay for it? You know, whenever it comes to like Medicare for all or, education or basic science and research or the environment or anything like that, it's always like, well, how are we going to pay for it? Or even like now with this, the stimulus that they're talking about and the checks going out to people and fiscal support, financial support to people whose businesses have been closed down because of government edict. You never hear them say, they're always saying like, we can't afford it. But when it comes to defense, boom, $740 billion, you got it, no problem whatsoever. It's a question of priorities. It is not a question of the dollars. The dollars are always there because the government is a creator of dollars. It spends in its own currency. It is a currency issuer. It's never a question of the dollars. The dollars are there. It's a question of priorities. And in this country, the military automatically gets the money. Trillions upon trillions. You want to conduct useless wars. You want to get a $14 billion new aircraft carrier. You want a $1 trillion F-35 fighter program. Boom, the money is there. Never, and that's bipartisan. That's both sides of the aisle. That's the Democrats and the Republicans. The money is always there. Nobody's ever asking how we're going to pay for it. I'm just saying, all right? So that was a positive for the market today. Look, let me go over some of the numbers here. I think they're instructive. Number one, I'm going to say this again, and I know ad nauseum, it's, you're probably rolling your eyeballs. Fiscal support is just at huge levels, unprecedented. We're up $278 billion over last year already. The deficit is $603 billion. That is the most in a 2-month period ever. Okay, October, November, we're a little bit into December, 2.5 months, $603 billion. That is about 2.9% of GDP right now. And that deficit, which I don't know if you read about it in the media, they're going to say, oh my God, the deficit. But that is the net transfer to the non-government, to the economy, right? If the government spends $603 billion more than it takes away from us in taxes, we have received a net $603 billion. And that'll show up in personal savings. You'll see it. If you listen to my podcast, I go deeply into this. We went decades, 40, 50, 60 years, Wall Street always saying, hey, give us your money. We got to grow your savings for retirement. They did nothing. They enriched themselves, okay, but they did nothing to grow personal savings. And then in 2 months this year, unfortunately, as a result of the pandemic, savings went from like $300 billion, where they kind of like were at that level for 40 years, all right? Despite, all the advertisements about Wall Street helping you grow your retirement and all this bullshit. They went from like 300 billion to 6 trillion in 2 months. Why? Because of government transfers, deficit spending. That's how it works. That's how it works. So on that note, this is why, and I said this, the stock market is not going to have a big correction because there's too much money being pumped in. Now let me just say this. Because a lot of people, and understandably, are making the correlation between now and the crazy stuff we're seeing, like with Tesla and Airbnb and DoorDash and these stocks that, you know, on an IPO, they're worth 100 billion, 200 billion. The founders go from zero to like mega billionaires. They're making the analogy or the comparison with 2000, the dot-com. And that's totally understandable. Totally understandable. And even myself, admittedly, I will say, like, a lot of this stuff looks crazy to me. But the difference is, in 2000, the government was running budget surpluses. Now, a surplus is the opposite of a deficit. The only way the government can run a surplus is it has to tax more than it spends. So it's net taking away savings and income. All right? And that's what popped the bubble. Now we got the opposite. Yes, we have an overvalued in many instances the stocks and stock market, but we have these enormous transfers going on. Enormous transfers going on. So corrections are going to be very shallow. There's just you know, the swimming pool analogy again. Here we go. So you got to buy every dip. You got to buy every dip until they change this policy. And who knows if they will. And I'm not asking them to. You know, invest. If you understand the macroeconomics. Folks, how many times have I said this? I had people here saying, Mike, you can't predict. I don't try to predict the market or stocks or currency. I predict conditions, all right? And that you can do if you understand the monetary system. You can predict conditions. You know, you have to understand MMT, otherwise you're completely out of paradigm. You're using the wrong analogies. And again, I'm the only one with an applied approach to MMT. Anyway, it's Friday. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Have a great weekend. I'll see everybody on Monday. Bye-bye.